Good afternoon, Scott Redler. Welcome to today's recap, the Friday recap after a long week. It was funny, I did a segment on CNBC today, and then afterwards I was able to talk to Bob Pisani, who is actually the first guy that got me on CNBC like 5 years ago because I was his little IM buddy. And after a while of just IMing him for like a year and then having him, maybe say a few things I might have talked to him about, he's like, hey buddy, why don't you come on TV? I'll get you a hit. And then anyway, it's been a marriage since then. He was just talking about the same thing that we talk about all the time, that he went from having to compare, Pepsi to Coke or Target to Walmart. Now has to like go into the legislature of Slovakia and figure out what their voting situation is, or in Greece what a referendum really means, and it's just interesting how much we have to really know as traders. We have to. I don't say we need to know the dotting the I's and crossing the T's of what goes on, the policy in Europe or Italy or wherever, but obviously there's a lot more to learn or know than we did have to way back when, because these global markets are just so connected, and we have to know how the market reacts to these headlines more than the nuts and bolts of it, but we have to know when they're coming out, and there's just a lot to look at. So that's why we try and really prepare each day levels to know, so you're confident if we get there. And then obviously sometimes it's hard to put it on at those levels, because once you're there, you're in the moment, but that's why you have to be ahead of the moment. And then also we just come up with the stocks that are acting well, and you have to really just have it in front of you, because if you don't have it in front of you, you're never going to be able to know how to react. And it's Friday. I'll do a little bit of an extended recap. So Parker, we might be at 5:25. No? You have to go? Okay, so this will be quicker. So I was going to say grab a beer or a glass of wine. It's Friday, you're allowed. Anyway, so that means we have to take it to the charts. Go take a look at the SPX. SPX, I talked about this 38.2% retracement. We had a quick move down Monday, Tuesday. Wednesday, they gapped it up, but they held. Okay, a little bit different than we've had since the rally that started back on that Tuesday, since this outside day when the bears lost control. And obviously after they lost control, they got pushed back real hard right here when there was absolutely no pullback, and we broke this little downtrend, and then we enjoyed this nice uptrend, this nice ascending channel. Unfortunately, ascending channels typically break to the downside whenever they're ready, whenever they've had enough, and maybe 1292 from 1076 was enough for now. So that's why when it breaks, you have to figure out what's going to happen next. So as you see here, we've bounced back, and we're not really quite above it, but it was enough of a bounce back to negate the exact power of what was going on here. So at this point, like even today on the show, Brian Sully, my buddy, my boy, anyway, not really, he's on my notes and we talk a lot, and I'm happy that he's using me as his consistent technician. He said, like, what are you now? Are you bullish or what? And at this point, I have to be a little bit more bullish versus bearish, based on the fact that I think that this was a digestion week. Yes, there's a lot of reasons not to be in the stock market, a lot of reasons that are scary, a lot of things going on that we all don't understand. And we're trying to understand, but what I do understand is the action, and what I do understand is that there have been some stocks making new highs, some constructive situations. There's a lot to do if you're an investor or if you're a trader. There's actionable trades, and there's also things you can hold. So a few more clues that I think will be interesting for next week are, obviously Apple and Google. They've been trapped in these little boxes. Like I said it today also. Which way they resolve will give us clues on whether or not this market can make new highs for the fourth quarter or not. So if you look here on Apple, you'll see, this box type pattern. Okay, this was, the upper end. Here's your lower end. Here's your 50-day. Yesterday, it was a decent type of trade to push through into the gap, and then today, a little bit off. It's still not showing any relative strength. It's not showing any power. It's not doing any Apple-esque type of stuff, but it's in the game. So I'm going to continue to try and be long, as long as it's in the mid to upper, and then we'll see one day if it ever gets above this 410, there'll be a nice trade here, and then that'll give us some clues that the tech might get a little bit more action. Google also. If you look at this pattern here, I know it's been frustrating, I know it's been choppy, but sometimes it takes this amount of time to absorb a move like we've had. It did come from 480 to about 550 something before the earnings gap. So the question is has it been enough time to absorb it? And will we be able to, besides being in a tier 1 in this, if that's what you're looking to do? Because if you're in a macro positions, you should be in macro tier 1. And if you're not, maybe look for a trade above the 601, 602. And if that were the case, then we see a move back to the highs of the year. But a lot of people have footsteps in their head of what happened here when it pushed through, came down, and then failed. So right now, new situation, we'll figure out how it goes. As far as some other high beta tech, not much going on there. Netflix gave us a nice push earlier in the week into the gap on this day. I think a lot of guys caught it, which is great. And now we'll see what happens. Like people talk about A, B, and C list. It was on the A list as of yesterday, pushed through, gave you a nice trade, and now it's on the B list. If it stays here for a while and goes sideways, who knows? Maybe it comes back on the A list, and we'll be able to trade it again for another cash flow type trade. And this is what we're allowed to do in our business, because we're not caught in this, we're not caught in that. We saw when the relative strength changed, when it broke this multi-month uptrend and then had no bounce. The technicals do add up. I know guys like to use fundamental analysis, but sometimes it's hard to stay solvent until the fundamental thesis gets met. So, as far as that, we'll look at that next week. Amazon also, a little tricky, but it's setting up for another push. If you look at Amazon, you'll see, not quite the power or as of late, but it gave you that nice trade early in the week when it went above this 208, or what was that? I think maybe last Friday. And now it's doing it again. Maybe next week we'll see that trade above 218 for another push to fill this gap. But at this point, if you're an investor, you're in the penalty box. It's going to take a long time to absorb this as we get closer to the next quarter. As far as, let's take a look at the semis. What are the semis doing? The semis look good. Nice push off the low, went sideways, went to bigger resistance, filled this gap, and held support and was green today. Semis are looking okay. XLF, not so great. Let me take this out of the way so you can see a little bit clearer here. You had a big move off the lows, so it's actually holding in there. I sent the note to CNBC also saying that here's your level. Watch this 13 area. Would be good if we could hold this area, and then the line in the sand comes back down to right around here for this area. And for Goldman, it's trying to pound out a little support here. So use this as a barometer. You have what 102-ish or so. So as long as it stays above this, it's okay. If it starts breaking below this 102 area, I think that the market could get a little trouble. The banks could become a focus again. Today, one of the new guys, not even a new guy, an old guy but new guy who just came over, started pointing out FFIV. I had it off the charts earlier this week. Nice trade through a level, great for cash flow. Just something to do. Let's take a look. Sperling was all over it. Congrats, Sperling. And take a look here. This is a nice setup, right? Earnings, I think this was that earnings gap. Had a push, retested it, held, came back up, and then pushed through this, whatever level this was, this 108. I think I bought it at 108 and I sold it at 109. Nice cash flow. We're allowed to do that. That's part of the job. But it looks okay also for higher prices. So that was something that just came on the radar. We haven't talked about FFIV for a while. LVS still hanging around, hanging tough. One of these days we'll get some follow through. Obviously it's been a bit painful if you add on strength. It's been better to add on weakness. Been trying to hold this for a few days. Take a look here. It's still within this range, holding higher, right? Here was the low, came back up. Your earnings, okay, I think this was earnings. And then remember when it filled the gap that day, I think it was Tuesday or one of those days, I was like, look to LVS to see if it could actually go positive, and it did. So nice little strategy. And if you look now on a longer term basis, it's hanging out. This is a long channel. That means a lot of people are accumulating in this. It means a lot of people that owned it from way back when, which we did also back here, have been probably taking their profits, and you have a whole new level of interest. If you go to your weekly chart, looks pretty good, right? Look at this nice midterm channel going across. So at some particular point, it should break out. And we'll hopefully be there when it does. And if it does get above 50 and change and the market gets the green light, I guess, you'll see this thing probably, what is this over here? This is, that low is 65. This could be $65 at some time in 2012. You heard it here first. Red Dog says that, I'll put a few of my disclaimers, obviously. We hold above 40, okay, and we break above this 50, we could see 65. I guess that's not really going out on a limb, but that's what I'm willing to do right now as I take another sip of my wine with you guys. Hopefully you're sitting down, relaxing, you had a long week, and you're watching the recap, because we're real traders, real time, a lot of anxiousness. Anyway, I didn't take a sip, did I? No. Nice Chardonnay. It's from one of the open houses. Hopefully you guys attend the open houses, because we give out wine and beer. I don't have this under my desk. It actually was just left over from the last one. So let's go to the next chart. Caterpillar. Looks pretty good, right? Here was the quick move off the lows when it was acting horrendous, so no need to be a hero during this whole mess. This was your reversal. This is when it broke this downtrend. Give you a nice move up to the moving average resistance. Pretty much said not to chase it over there, but then what it did do is it held this gap, showing power. The bears couldn't press it in and fill it, so that just showed that there's commitment here. And now it's looking as if it could get some higher prices. The longer it stays in this upper zone, the better the odds that it's going to break above and probably see, who knows, I've seen crazier things. Maybe this even fills this gap up to this point at some point, this 110. CF, rockstar this week, right? Came out with earnings, was down, went positive, and then broke above, nice inside day, let it go sideways, and then this can continue. GLD actually rewarding traders for the first time in a while. GLD, it has always been a macro hold for me, or for people that listen to me. I'm not holding it right now myself, but I just lost my toolbar. We'll get that later. So this was your trade, right? This was a trade when it broke the slower end. Here was your macro wedge that resolved to the downside, but rightly so, from a move from where we were early in the year, 1,1300 to up to almost 1,900. It's allowed to correct, considering it was at 1,000 when we started talking about it, or even 850. So down in this area, nice little break or resolution to the upside. Then on that Tuesday, showed a lot of strength. And if you took it there on that Tuesday, you got paid. And now it seems like it's hovering again. Let it hover, and then with a little bit of time, maybe it gets above this high here of 172, fills the gap, and continues. The mining stocks acted better. GOLD actually paid you through new highs. Newmont gave you some follow-through. Some of these gold mining stocks actually working out for the first time, and not just being these false starts that drive everyone to drink, which I'll take another drink. Parker, you still have your wine back there? There you go. Newmont, where is that? Look at Newmont. Newmont trying to get out of this downtrend, breaking higher. We'll see what happens from there. So all in all, I'm going to call it a night, a week. It's been a long week. We've all been studying for our test, the 24. Tough test. There's going to be a lot to watch next week. Look at the blog. I put together some charts, some lines in the sand to watch for next week to see if we could hold above. Charts that I sent over, for the media that you guys could also have. I talked about it on the radio. And I think there's going to be a lot of opportunity. But you have to kind of read through the headlines. You can't be scared. You have to trust your tactics. You have to know your time frame, know what your size should be, know what your risk is. And as you put them all together, you're going to continue to make money. And then you're going to make progress. And then you'll be like, okay, I'm so happy with T3. No, you'll actually make money from the market, because there's too many people out there that get abused by the market. They hate the market. I'm never going to look at it again. That's only because they don't know how to maneuver the market or understand it. Can't control it. You can only maneuver it. And the tactics that we try and preach are situations like on a tool belt that you could use in any different type of tape that we see. And right now, the move off the lows, I think, was digested this week. Some chinks in the armor, but the bull isn't down. And I think next week will be important. We'll try and uncover it as it unfolds. Scott Redler, T3 Live, the recap. Enjoy the weekend. See you Monday morning.